One of the major reasons we fail to secure ourselves financially is because we are unaware of the things that need to be done. We do what we feel is right. Maybe we've learned these from our homes growing up, observing our parents and people older than us. Maybe we're taking tips from friends, family, and co-workers. But that might not always be sufficient. So it's essential to know what are the key components that you need to focus on while creating a roadmap for your financial well-being. So in this episode of the Wealth Nation podcast, we're going to be talking about different aspects of personal finance to give you an idea of how your complete financial picture should look like.
Welcome to the Wealth Nation podcast, a podcast for every mother, daughter, grandmother, sister, and wife, and the men who are smart enough to tune in. The Wealth Nation podcast brings you all you need to know about investments, business, property investments, personal finance, and all-around financial wellness. Here is your host, Yolanda Rose.
Thanks for joining me today in another episode of the Wealth Nation podcast. I am Yolanda. I'm a wealth advisor and I am the director of Solomon Wealth as well. So if it's the first time that you're tuning into the Wealth Nation podcast, welcome to the show. Where have you been for so long? I think you have about 100 episodes to catch up on. Luckily, it's always going to be available. So when you get a chance, download as much as you can and listen to all of our past episodes. And I would really love for you to leave me a review as well. So if you can quickly do that for me, leave me a quick 2-line review. Let me know what you think about the podcast or what other content should I be covering here as well. The Wealth Nation podcast is brought to you by Solomon Wealth Management. Solomon Wealth Management is an innovative team of wealth managers that addresses the entirety of your life, your family, your business, your future, one facet at a time. We use our skill and expertise to the consideration of what you have accumulated and how best to administer it through life's changes. From financial counsel on managing your wealth to careful contemplation of how to transfer it to future generations, it's your vision for your future combined with our skill and expertise to help you reach financial excellence. So if you want to sit with us one-on-one, go to www.solomonwealth.co.za, click on the Get Started button, and we could be chatting one-on-one. Before we get started on today's show, I just want to quickly remind you about the webinar or the masterclass that we've got going on now. You can go to our website. It's www.financiallyfabulousfemales.com, and it's on that first part. There's a big button there that says join now. So that's the webinar on the 5 investments that every South African needs. So if you haven't checked out that webinar, go check it out. That's going to be coming down in a couple of weeks, depending when you are listening to this podcast. So now is your chance. Go have a listen. We're going to refresh that. We're going to put a brand new training up, but I don't want you to miss this one. Okay, we're going to build and expand our knowledge even further in the next masterclass. So go and check out the 5 investments that every South African needs to make. Okay, so let's take a deep dive into our topic today. We're looking at the various aspects of personal finance that you need to have in place. And there's so much. And there's 5 we're going to talk about today, but I want you to think about this 5 as the first layer. These are the 5 priority areas that you need to think about. Master it. Get it solidified in your life. Get a plan for each of these 5 areas, and then from there start building. And this is your actual foundation that you're going to need to be building your financial house on. All right, so the 5 aspects that we're covering today to make your financial picture complete would be saving, investing, financial protection, tax planning, and retirement planning. So one is not greater than the other here. These are the 5 equally important foundational elements of a complete financial picture. This is level 1 though. Okay, so savings. This here we're basically talking about keeping money aside as savings to cover you in an emergency. So specifically emergency savings, that's what we're talking about. Then investing. Now investing is important to grow our funds so that we're able to achieve all the things that we want to with our money. There is financial protection, like I tell my clients, and if you're a client, you know that I tell you this. While you're out there building your empire, anything can happen. Life can happen. An accident, a major illness can take you out and derail your plans completely. And that's when your financial protection comes along in the forms of insurance. Okay, and this ensures that you and your family are able to sail through whatever these hard times that may come. This is your protection that you need. Then there's tax planning, and with a proper tax planning, so you got to make sure that you have adequate expenditure and investments. You can bring down your taxable income using all of the various tricks that we talk about on the podcast and all of the various other content we talk about, and eventually to save you a lot of money every year. Okay, not to do anything illegal and be dodging taxes. We have to be responsible citizens of the country. Nobody likes to pay them, but if you're paying them, pay as little as possible. Use all the legal loopholes that you get. And then there's retirement planning, and this one is important because the key here is to start early. And retirement is very crucial, that you have a big bank balance, or you have that large amount that is solely to meet your needs during retirement. And it all starts with time in the market for retirement planning. So the earlier you get started, if you are able to start for your kids, start. Number one, saving. The need for sudden money can come up at any time. This can be anything, like from a car breakdown. You need to pay insurance access for your home or even your car, or even if you lose your job. All right. The emergency events can be dealt with if we have enough to cover our need. And the fund for your emergency need should be at least, bare minimum should be 3 to 6 months of your expenses. Now, it's nice to have a big amount to cover you for at least a year. The problem I have with that is inflation. Inflation is really high in South Africa. So how I like to do it, and what I recommend to my clients, is have at least 3 to 6 months. Have it in your 32-day account, or maybe a fixed deposit, a short-term fixed deposit that you can get in case of an emergency. So I typically like to have a sum in my 7-day account. If there's an emergency, I can swipe my card, release the funds from my 7-day account, and settle my credit card balance then. All right, then we have a larger amount in the 32-day account, or even a 1-month fixed deposit or something like that, where if something happens, where there's a huge cash flow problem, I got to withdraw, then the funds are sitting there. And with these fixed deposits, you're not getting the best interest rates. And so year by year, your money is being eroded. So you got to top it up regularly, and then have the rest in some long-term investments. Okay, something that you can access quickly, like a unit trust or something like that. And something that's high in bonds, a significant chunk in the money market. So you can liquidate that and still have some sort of fixed income coming in for that specific unit trust. So the key here is liquidity, and there are excellent options for you to just park your money that's meant for emergency needs. So number 2 is investing, and we often confuse saving and investing. A lot of us consider them to be one and the same, and they're not. And while saving is about setting aside money for an emergency, investing is putting money away into assets like shares, like bonds, like ETFs, like unit trusts, in order to make your money grow. Now, talking in investment terms, unit trusts are an excellent investment option if it is done right, mainly because it's highly liquid. You can get quick access to that money. There's no penalties if you had to pause it. There's no penalties you have to pay when you withdraw. Other than the taxes that would be due. So while investing in unit trusts, it's very essential to be mindful about your portfolio construction at this point. It might be counterproductive if it's not aligned to your goals that you set. So it's essential for you to make an investment as per your investment requirement, your risk appetite, and your investment horizon. So ideally here, you want to turn your dreams into goals. Okay, so you're going to set those financial goals for yourself and set a time frame around that. Then you pick a unit trust that matches your investment time frame, and also you got to know your risk appetite as well when you or your financial advisor is constructing this investment portfolio for you. So what should you pick in this sort of investment? Well, you got to look at your short-term goals. These are the goals that you need to achieve within 3 years. Maybe you're saving up to buy a car, a deposit for a home, you're saving up for a trip. Okay, so these kind of short-term goals, you want to be, you don't want to be high equities. You want to be in bonds, some good returning bonds. And then you want to look at your midterm goals. So if you have set these goals for yourself, anywhere from 5 years, 8 years, these are a sort of midterm goals where you can take a bigger risk into equities. And then the long-term goals like retirement, your kids' education, your kids' marriage. So these long-term goals are greater than 10 years, 15 years, and you're slowly putting your money away here, investing it. You want to have a nice exposure to equities because that's a platform that's going to be growing your money. So number 3 is financial protection. And that's your insurance bit. And while we might come up with all these nice dreams, these nice plans for our life, anything can happen. And we don't want those dreams to diminish when something happens, okay? So we want to prepare, and we want to prepare in advance. And I know sometimes we think, you don't need insurance, but the only time you'll realize how important insurance is when something happens. And when something happens and you can't get it, you are in such a place of deep, deep regret. And if you don't have it, then it's a liability. And when you have it and you're thinking, why am I paying for this every month? You're not seeing any value. But guys, there is so much value in this. I cannot tell you, like for me, I sit with claims every day, and how much individuals are helped, families are saved by insurance money. It's unreal. So there's different types of insurance that you can take to fulfill your need. Firstly, there's term insurance. Go and check out my YouTube video on this. We spoke about whole of life insurance and term insurance just for a specific time if you die prematurely or something like that, where you can cover yourself up to retirement age or until your kids are 18 or 25. Then you have your medical aid and your critical illness insurance. So your medical aid is for your hospital expenses when you're in hospital. Critical illness cover is when you have that major disease, you have that heart attack, that stroke, cancer. Cancer is a terribly expensive disease to fight. And when you're fighting this disease, you got to have that financial peace of mind, because if you don't have those finances to fight it, you're sitting in such a place of defeat. So make sure you have critical illness insurance. And cancer is becoming more and more prevalent. And it's not just the older folks, a lot of younger folks as well. So the key here is to take this kind of insurance when you're young and when you're healthy, because that's when it's the cheapest. Then if you're a homeowner, you want bond insurance. And sometimes, bonds force you to take this kind of insurance. But if you have adequate life cover, depending on your life circumstances, of course, you don't have to take something new. You can just leverage on what you have. And then is your income protection, your short-term income protection, your long-term income protection. If anything prevents you from gaining an income, you still need that income to come in. If you're too sick to work, that's where your short-term and your long-term income protection comes into place. And number 4 is your tax savings. Guys, we got to know taxes. And I know it's not something that we teach in schools or we just trust the accountant to do it. It's great that we do that and we go to a specialist. But we got to have some level of understanding at our point. We got to understand the tax breaks that we get in terms of medical aid, donations, retirement savings when we contribute to the retirement. All of that just lowers our tax liability. Know what's going to happen in terms of taxes when we retire, what's going to happen when we die, what taxes are due when we die. I call them the death taxes because we don't really plan for them, and you got to pay for your taxes when you die. And if you're not going to pay, your family's going to pay, and if they don't have the funds for it, guys, they're going to be in so much trouble. So plan for this. And number 5 is retirement. Retirement is one of the most crucial life stages and can be very blissful or miserable depending on how you plan for it. Now, planning finances for retirement is basically a 2-step process. First, you're saving for retirement, and the second is generating income from the assets during retirement. So we have the pre-retirement phase and we have the post-retirement phase. Both requires very different strategies and some such unique products in South Africa. Like depending where you have your retirement products, you can withdraw from your life cover tax-free during retirement. Because ideal situation, right? You're retired. Your kids are out of the house, or if they're in the house, they're financially independent. You don't have to worry about them. Your bond is paid. Okay, your biggest expense is most likely going to be your medical aid. But if your kids are financially independent, your debt is paid, there's no need for huge amounts of life insurance. So you should be you should have that opportunity to draw from your life insurance tax-free at retirement. So you need that multiple income pots. Go and check out my videos on YouTube. I did the retirement planning. I think I did one or two videos on that, where I showed you multiple levels of income, but the key is starting early. So saving for retirement, again, two major reasons here is for loss of income and increased life expectancy. So let's assume you retire at 60 and you live up to age 85. How do you plan to fund your expenses for 25 years after retirement? At a time when you don't have a steady income. Maybe you can't retire at the age that you're planning for. You have to work longer. A major consideration that a lot of folks don't consider when planning for retirement is inflation. The rise in the price of goods and services for regular use, your expenses will be much higher at retirement than it is today. For example, if you're living off 20,000 Rand a month today, you got to plan for 20,000 Rand per month at retirement, and you got to factor in inflation. Buying power of 20,000 Rand could easily be 80, 90,000 Rand, depending on your age. Like for me to plan for 20,000 Rand per month for retirement, I would need the equivalent of 90,000 Rand when I'm 65. That's a lot of money. And, we're putting in inflation there. And that inflationary cost is going to cost me about 80, 90,000 Rand a month. Okay. And the next thing we're looking at is generating an income during retirement. So what would basically happen is your retirement savings, we would invest it for you to draw an income. And here your option is a life annuity or living annuity. Living annuity, you get to choose where you invest. You get to choose how much you want to withdraw. The life annuity is where you say, right, you go to your insurance company, you say, right, this is my lump sum. I want you to pay me an income till I die. Pay my spouse an income as well till I die. It's a lesser amount, but it's guaranteed income. So depending on that one pot, just a paper asset for retirement is not enough. Guys, you have to have multiple sources of income. Start now. So the bottom line here is that you are in control of your finances and you have the power to make the life choices without worrying about money. So the bottom line here is the choice is yours. You got to know these five aspects of saving, investing, taxes, retirement planning, and financial protection. Okay, you got to know it, you got to master it. And then we got to look at the other aspects, such as estate planning. Huge one is estate planning, more advanced level of investments, tax-free investments. The investment sector alone, there's so much, That's the most exciting part. Nobody likes to look at the rest. But guys, the rest is equally important than just investing. All right, so that's it for me on this episode of the Wealth Nation podcast. I'll chat to you next week.
Thanks for tuning in. Make sure to visit our website at www.financiallyfabulousfemales.com and sign up for our free investment masterclass.